If you are a real estate agent residing in Ontario, you've probably heard the good news that allows real estate agents to incorporate their practice. But what does that actually mean? And more importantly, how can it save you on taxes and increase your bottom line? Hi, my name is Darius Muica. I'm a senior investment advisor with Nor Private Wealth. If you are new to my channel, I focus on helping clients build wealth in the most tax efficient way possible. In today's video, we'll discuss the benefits of incorporating for real estate agents, the tax advantages and top strategies to help you keep more money in your pockets. Bill 145, introduced in March of this year, allows real estate agents to incorporate, which is obviously a good thing considering that the corporate tax rate for income under $500,000 is 12.5%. On top of that, being incorporated allows for tax deferral and income sprinkling, which I will be addressing later on in the video. But before we dive into that, let's focus first on understanding the marginal tax rate on personal income. As you can see in this chart, the higher the income, the higher the tax is paid. Up to $44,000, the marginal tax rate is 20%, while over to $20,000, the marginal tax rate jumps to 53%. So for somebody earning $180,000, for example, the first $10,000 are not taxed. From $13,000 to $44,000, the marginal tax rate is 20%, and the tax payable is $6,000. From $44,000 to $48,000, the marginal tax rate increases to 24%, and the tax payable for that portion of income is $900, and so on. On the last row, the income from $150,000 to $180,000 is taxed at 48%, and the tax payable is $14,000. If you add up all the numbers in the tax payable column, you will get a total of $59,800. So if you are making $180,000, notice it says net income, which is the taxable income after deducting the expenses. The taxes payable are $59,800. Regardless if you spend all this money or not, the taxes are paid. This is not the ideal structure when your income is fluctuating. Now, if you were incorporated, the tax rate for the corporation would have been 12.5%. as long as the net income is under $500,000. In this case, you would pay $22,500 in taxes. That's a difference of $37,000 compared to being taxed as self-employed. However, keep in mind that you still have to pay taxes to take this money out of the corporation. If you were to take all the money out, there is no tax advantage. So is it worth incorporating? Let's take David and Patricia, both successful real estate agents. David is not incorporated while Patricia is. They both make $250,000 before business expenses of $70,000. Their taxable income is $180,000. David pays $59,000 in personal income tax and another $5,700 in CPP contributions. His after-tax income is $114,000. Because David spends $5,000 per month or $60,000 per year, he is able to save $54,000. Patricia, on the other hand, pays $22,500 in corporate taxes. Additionally, in order to cover her lifestyle expenses, she needs to pay herself $66,500 in dividends. The taxes on the dividends are $6,500 roughly, and she gets to keep $91,000 in the corporation as savings. This is a difference of $36,000. This money can be invested and work for you instead of being paid in taxes. But wait, there's more. Patricia can also split her income with her family, further reducing the total taxes paid. This can be done as long as her spouse is over 65 or if any of her family members are working in the business for at least 20 hours a week or if they receive a reasonable salary. If that's not the case, she can open a second corporation with her family as shareholders and transfer her savings from her own corporation to the new corporation as a loan. The investments, rental, interest, or capital gain income generated inside the second corporation can be split among her family members. So is it worth incorporating? If your income is reasonably high, if you are spending less than what you are making, or if you have someone to split your income with, then the answer is probably yes. If you want to know more strategies that can be implemented, or if you want to get a detailed analysis on your personal situation, let me know by leaving a comment below. That's it for today's video. I hope you found it valuable, and if you haven't done that already, make sure to hit the like button, and if you want to see more, don't forget to subscribe. If you have any questions or comments, please let me know below. I read and answer every single one, so thank you very much for watching, and I will see you next time.